We're going to be looking at my top pick, Armada Hoffler Properties, for the real estate sector coming up right now. What does Armada Hoffler actually do? So Armada Hoffler Properties is a vertically integrated, self-managed real estate investment trust with nearly 4 decades of experience developing, building, and acquiring high-quality office, retail, and multifamily. So they're in the industry of real estate, and they acquire office, retail, and multifamily. Now, here's an interesting quirk about them, which most REITs do not do in the space, is they develop property. So most real estate investment trusts do not actually develop their own property. They will buy a property from someone else or have somebody else develop it. But that's what makes Armada Hoffler very unique, and what I think actually gives them quite a bit of upside and strategic potential. Now here I have pulled up Armada Hoffler Properties info page on Seeking Alpha, and we see here that for a REIT you value them with a funds from operation, and so their forward funds from operation, their price to FFO, is actually a 9.11, which is very low, which equates to an FFO yield of over 10%. So that's pretty good. Now let's take a look at their chart here. So this is the chart that I have pulled up. You see here before the pandemic, they were trading for over about $19 a share, a little over, a little under occasionally. So $19 a share. After the pandemic crash, they crashed all the way down to $7 a share, I think at its lowest, bottoming out even below $7 in the $6 range. They've recovered since then up to around $10 a share. That's where I purchased some shares, in full disclosure, around $10 a share recently. That's why I'm making this video. But then let's look at some of their earnings. They got that 8-cent earning, and then 13 cents, and then 9 cents, 11 cents, 14 cents per share. They're relatively consistent in their earnings despite the pandemic and despite their valuation decreasing by over half at some point. The one thing here is they suspended their dividend for a period of time. So they were outputting a dividend of 0.22 before the pandemic. Let's look here at their dividend history. So we see their dividend has been really consistent over the past few years, to culminating to right before the pandemic, where they were outputting 22 cents per share per quarter, which is a pretty good dividend. But now they're yielding only 11 cents per share, so half their dividend yield is going to be something like 4%, a little over 4%. So that's interesting. You're getting paid 4% to hold this stock that's trading at less than 10 times forward FFO. And if we look at what's actually gone on, let's pull up some of their earnings. Their earnings here, we see that they're actually projected to be fairly consistent with their FFO earnings for the upcoming quarters. And if you look at that, that's not that much of a drawdown from their past quarters. So they're trading at half price despite not having a material decrease in their earnings. So that's interesting. So now we're going to be looking at a few of the key data points that I found from the most recent investor presentation, that being from Q2 of 2020. So let's look here. So all of their expenses and everything are relatively easy to project, considering they are a real estate company. The only uncertainty could be what rents they do or don't collect. So, and some other CapEx issues there. But if you see here, the FFO per share and FFO per diluted share is actually fairly consistent between the high and low projections. Either one of these numbers actually equates to a FFO yield per share of over 10%. So that means you're getting 10% on your money, sort of. Let's continue here. I've got a few more stats to show. We see here their portfolio and what actually makes up their portfolio. Now this is important. Their portfolio consists of office, retail, multifamily assets. Now they have a lot of assets in Virginia Beach, that town center. This is actually their net operating income from each of their assets for the 3 months ended in June 30th. So we see here from Virginia Beach, they have $5 million in net operating income, and from the rest of their portfolio, they have $15 million. So if we see here, the Virginia Beach area makes up about one fourth of their total net operating income, and the office space is a big majority of that. Now that's difficult because who knows? Will office space decrease because of this pandemic, or will it stay the same? I don't know. I think they have some pretty good properties, so I think they're going to be okay. Looking at their stabilized portfolio, excluding Virginia Beach Town Center, we see that office makes up a smaller percentage, and retail and multifamily, make up a larger percentage of that portfolio overall. So you actually don't have a very big exposure to office, in multifamily. I think multifamily is going to do really well over the coming months, considering people still need a place to live, and that isn't going away anytime soon. So we see here their portfolio is fairly diversified. So that does seem like a good thing. So in terms of the price target or an upside percentage that I could see this stock rebounding to before its pandemic highs of 18, 17, 19, that range. But really, even if it stays down around 10, you're still getting paid that healthy dividend that will, I think, in turn grow from its 11 cents it's currently at back up to where it was at before the pandemic of the 22-cent dividend. So that being said, I think the dividend yield is worth holding the stock on its own. They have high quality assets, high quality tenants, and really, I don't know why they're trading for such a low valuation at this point. I think you have a big opportunity in this stock. So thanks for watching. Please subscribe for more.